Inflation is one of the biggest challenges you face in retirement, especially when your fixed income isn't growing at the same pace as rising costs. If you're withdrawing from your retirement accounts and watching your purchasing power shrink, you're probably wondering, how do I adjust my withdrawals to combat inflation? It's a valid question, and it's something you need to address now, not later. Before we dive in, if you're serious about protecting your wealth in the next 2 weeks, click the first link in the description below for a free gold IRA guide. Thousands of Americans are using gold IRAs to safeguard their savings from inflation, and if you're one of the many retirees worried about your future financial security, this guide will give you the information you need. Now, let's talk about how to adjust your retirement withdrawals to keep up with inflation. The first step is understanding the impact inflation has on your retirement income. Even a modest inflation rate can erode your purchasing power over time, meaning your fixed income may not go as far as it did when you first retired. So, what can you do to protect your funds? One of the first strategies is adjusting the amount you withdraw from your retirement accounts. Many retirees follow the 4% rule, which suggests withdrawing 4% of your savings each year. However, in an environment with higher inflation, this may no longer be enough to maintain your standard of living. You may need to consider increasing your withdrawal rate slightly or finding ways to generate additional income from your portfolio. However, it's important to remember that withdrawing too much can put your savings at risk, so balance is key. In situations like these, gold IRAs are worth considering. Gold has a long history of holding its value, especially during inflationary periods. So by converting part of your retirement savings into gold, you may be able to preserve the purchasing power of your nest egg. Compared to stocks or bonds, which can be volatile, gold tends to be a safe haven in times of uncertainty. Another way to adjust is by reevaluating your investment strategy. During inflationary periods, some investments perform better than others. For example, stocks in certain sectors, like energy or real estate, tend to do well when inflation is high. But remember, while these investments can help your portfolio grow, they also come with risks. You want to ensure that your portfolio is diversified so you aren't relying too heavily on one asset class. If you're concerned about the impact of inflation on your future withdrawals, it might be time to start thinking about adding inflation-protected securities to your portfolio. Treasury inflation-protected securities, or TIPS, are government-backed bonds that adjust with inflation. They can provide some peace of mind if you're worried about rising costs eating into your savings. But let's be honest, TIPS and other bonds still come with risks. The best way to preserve wealth in uncertain times is by adding an asset like gold to the mix. As we approach the final point, let me remind you that if you're looking for ways to safeguard your savings, gold IRAs are becoming an increasingly popular option. They allow you to invest in physical gold within your retirement account, protecting your wealth against inflation and market volatility. If you're 55 or older and have more than 100K in your IRA or 401K, or even 5 pluses in savings, this strategy might be a perfect fit for you. So, before you make any major changes to your retirement withdrawal strategy, consider how inflation is impacting your financial future. Increasing your withdrawal rate, adjusting your investment strategy, and potentially incorporating assets like gold could be just what you need to keep your retirement secure. For more information on how you can protect your wealth, be sure to check out the free guide linked in the description below. It's specifically designed for American retirees who want to make informed decisions about their retirement savings. This guide is for people who are serious about their financial security, whether you're just starting to think about your options or are already well into your retirement years. Click the link and take control of your future today.